News when you want it with Bloomberg News Now. I'm Lisa Mateo.
And I'm Karen Moskow.
Karen, what a difference a day makes. Well, the market moves this morning follows a monumental day on Wall Street. U.S. stocks had their best day since 2008, with the S&P 500 rallying 9.5% and the NASDAQ 100 soaring 12%. Now, it all happened after President Trump ordered a 90-day pause on non-retaliating countries and is lowering reciprocal tariffs to 10% effective immediately while raising duties on China to 125%.
I thought that people were jumping a little bit out of line. They were getting yippy, They were getting a little bit yippy, a little bit afraid.
Well, the president says countries want to make a tariff deal.
We don't want to hurt countries that don't need to be hurt, and they all want to negotiate. The only problem is, you can only do so many at one time. It's like, we want to do it right. We want to get it right.
Well, that tactic puts Trump on a collision course with Chinese President Xi Jinping, whose government has vowed to fight to the end in any confrontation and looks to shore up ties with trade partners to resist Trump.
Well, Lisa, the Wall Street rally is spreading overseas. Our first stop is Asia, where stocks in Japan soared. Let's go to Hong Kong now and get the very latest with Bloomberg's Jill Deeses. Jill, good morning.
Good morning, Karen and Lisa. Yes, we've seen surges pretty much across the board. Stocks in South Korea rallied by the most in 5 years. Japan's equities recorded the biggest gain since August. We also saw some pretty significant numbers in Taiwan, where the TAIEX surged, really helped by TSMC, the big chip maker there. Even in China, we did see some increases in Hong Kong's Hang Seng Index. The Shanghai Composite recorded some modest gains earlier today. That's despite that 125% tariff that remained. Part of this really comes down to sentiment that a lot of these tariffs are being delayed. Maybe there's room for negotiation elsewhere. Obviously, we'll have to ultimately see what happens. But certainly the sentiment in Asia is that investors are breathing the sigh of relief. We've already started to see some responses from various nations that were impacted by these tariffs, particularly in Vietnam, which was set to receive a 46% tariff from Trump. Obviously, that now called off because of this 90-day reprieve. But yes, certainly the mood is obviously incredibly euphoric here. But again, with this 90-day reprieve still on the table, and it's still being very unclear as to how any of these tariffs would actually be negotiated, there's a lot left over the coming weeks that we'd have to dig into. In Hong Kong, this is Jill Deeses, Bloomberg Radio.
All right. Thank you, Jill. In Europe, we have stocks surging the most since 2020. Let's get the very latest with Bloomberg's Ewan Potts in London. Good morning, Ewan.
Karen and Lisa, an update for you on the roller coaster that is markets this week. Stocks surging as European investors respond to the US president's tariffs rollback. The Stoxx 100 currently up 5%, just pairing some of the gains at the start of the session, but still the biggest surge since the beginning of the pandemic. Banks up nearly 8% and technology stocks up 7%, currently the top gainers. But a lot of green on screens today, with 586 companies higher on the Stoxx 600 today. Live in London, I'm Ewan Potts, Bloomberg Radio.
All right, Ewan, thanks. Well, it was quite a wild day on Wall Street, with President Trump executing one of the biggest economic policy reversals in modern presidential history. We get the recap with Bloomberg's John Tucker. John, good morning.
And good morning, Karen. Well, in the end, it was the wild market swings that forced the president's hand. Jay Pulaski is with TPW Investment.
Thank goodness for independent financial markets, which I believe bounded and forced the president and his team to reverse themselves.
And that's a view shared by Professor Nirupama Rao at the University of Michigan.
You can legislate, or not even legislate, you can dictate tariffs, but you can't dictate how markets respond to tariffs.
On the floor of the New York Stock Exchange, murmurs at first turned into a roar as the news of the tariff reversal hit. One trader said it was total shock and awe. The floor erupted. The S&P 500 ended the day up 9.5%. But Francis Donald at RBC reminds investors tariffs haven't totally gone away.
To me, last week, I thought America's cut off both its arms. Today, one arm.
Well, Trump implemented the 3-month pause after a frenetic meeting with economic aides. The decision came as they were watching the bond market. The 10-year Treasury saw the biggest 3-day jump since 2001. The president was confronting a worst-case scenario. Voters who had returned him to the White House because of inflation now face both increased prices and higher borrowing costs. As the president then said, people were getting a little queasy. In New York, I'm John Tucker, Bloomberg Radio.
Thank you, John. Meanwhile, Goldman Sachs economists have rescinded their forecast for a U.S. recession. We have that story from Bloomberg's Charlie Pellet.
The call came after President Trump announced a 90-day pause on most of his previously announced tariffs.
A deal's going to be made with China. A deal's going to be made with every one of them. And there'll be fair deals. I just want fair.
Goldman chief economist Jan Hatzius said we are now reverting to our previous non-recession baseline forecast. Goldman economists initially called for a U.S. recession, but rescinded it after the president announced the pause. In New York, Charlie Pellet, Bloomberg Radio.
And that's news when you want it with Bloomberg News Now. I'm Lisa Mateo.
I'm Karen Moskow, and this is Bloomberg.